with cash being removed from society and everything going digital, I imagine that number is in fact far higher. 1 in 3, and this one I thought was interesting, 1 in 3 advisable Australians have used or are using a buy now, pay later service such as Afterpay. So they're actually interested in instalments and less interested in credit cards. 1 in 5 are using an online brokering account at least monthly, and 1 in 5 are also using a robo investing platform such as Raise. So not just the millennials are doing these things. So again, the real point here is that your clients are interacting with their finances, whether it's payments, super, investing, all the time. And yet when we think about financial planning as an industry, it is still very paper-based, face-to-face. And so we do need to really think about how do we augment that relationship and that engagement model in between those sort of more typical review meetings. And I think just finally on obviously wealth going mainstream, we saw a couple of months ago now Afterpay in the biggest ever transaction in Australian history when it was sold to Square for $39 billion. Now, clearly this is about the millennial market, so they've bought a huge millennial market, but it's also about just that move to online and the fact that Square wants to, in many ways, cut the banks out of wealth management. And I think now when Square dual lists on the market in the next many months, it's going to be the 3rd or 4th largest stock on the ASX, above pretty much every bank except for CBA, I believe. So things are changing, and they're changing rapidly, and it's changing as a result of those 3 big mega trends that we just touched on. Okay, so hopefully I've made the point. COVID tech acceleration, millennials became too hard to ignore. Digital wealth services went mainstream, really means that digitising your client experience has now become a non-negotiable. As I said, welcome to 2021 and the future of wealth. So what can we actually do about it? Look, there is a range of things that we can certainly talk about, but we wanted to talk about 4 that are fairly easy to implement within your own business. But we also wanted to just explain that replication does not equal innovation. So there's a lot of people doing a lot of really interesting things, but if you want to truly innovate and really change the way that you're engaging with your clients, you are going to have to think more laterally. You're going to have to speak to your clients. You're going to have to understand your clients, because ultimately you know them better than we do, and there's going to be variations on every theme. Now, unfortunately, we can't go through all of these 5 today, but what we are going to focus on is the first 4. So let's get started. Again, why does it actually matter? Why is it important for advice tech stars to think about technology and to be very deliberate about the technology that they adopt? So hopefully you agree that we do need to do something from a client engagement perspective, but there is a difference between doing something and being really good at it. And again, when we've been doing this advice tech research, we've managed to pull out a segment of the advice community that we call the advice tech stars, as opposed to advice tech underperformers or the advice tech laggards. Now, the advice tech stars have got much higher technology adoption scores than anyone else in the industry. But more importantly, they're not just adopting technology, they're seeing significant business benefits as a result. So they've got the best of the business scores as well. And to just to explain that in a bit more detail and to show you a typical profile of an advice tech star. So 55% of advice tech stars have revenue with over $2 million in financial year 2020. 29% of advice tech stars, so that group of advisors that are using tech well and seeing the big business success, saw revenue growth over the last 12 months of greater than 11%. And that compares to 19% of the broader advice community. 35, so 1 in 3 advice tech stars has got an EBITDA margin of over 30%. And 21% of those advice tech stars grew their EBITDA by 11%. So they're seeing great growth even through what has been a pretty traumatic time. Interestingly, 23% of advice tech stars have also got greater than 30 staff. So the reason for sort of calling that as the statistic is that even as they've scaled their businesses, they've been able to really adopt technology and still get the benefits. And some would actually argue that the reason they've been able to scale their businesses to more than 30 staff and maintain very high EBITDA margins and revenue growth is because of their total technology adoption and success. And what's changed quite a lot over sort of the 5 years that we've been doing this report is that technology adoption within these advice tech star groups, and you can see that's the difference between the blue line and the pink line, if you can see that on the screen, is that initially it was all around back office efficiency. So when we were asking what's been the biggest benefit to your business as a result of technology, not surprisingly, the improved ability to manage compliance, better ability to scale, growth in client numbers, growth in revenue. So some of those more traditional advice metrics. But what we've started to see coming through really strongly this year is really that client lens, about the client focus. So firms are saying, you know what, since we've adopted technology and adopted it well, we're seeing off the charts client engagement. We're seeing really good improved client satisfaction. So not only are they more engaged, but they're more satisfied. I'm getting to spend more time with my clients. My quality of advice has improved, and I've been able to do more with less. So there are really tangible benefits to putting in effort and understanding how to adopt technology in your business better. Interestingly, and a few more stats just about these advice tech stars, they are very deliberate in what they're investing into. Now, they actually have more technology than the broader industry. So on average, they have about 17 different bits of technology within their advice tech stack, which support all the different aspects of their business. So back office efficiency through to client engagement. But despite the fact that they have more than 17 technology solutions in their business, as a percentage of revenue, it's only 5.8% versus the industry average of 7.3%. Now, I think these are some really interesting numbers just to think through in your own mind when you're thinking about technology. How much are you spending on technology? And more importantly, what percentage of your total revenue is spent on technology, and are you getting bang for buck? Now, we did some quick calcs last year. These are round numbers, but when you look at that sort of 14 to 15 number of technology solutions in any advice business, the average cost per employee is about $10,000. And that is a lot of money and a very significant impact on your P&L. So we want to look at how do we reduce that $10,000 down to a more to a less meaningful number. And the reason that people have got 14, 17 different solutions and why the costs are so high is because the technology has been adopted in an ad hoc way, that there's not particularly good integration. And more importantly, that a lot of the systems they've put in place actually have overlapping features. So they might have multiple task management systems, multiple document management systems, multiple document production systems. So we need to be really deliberate about how we start to reduce the number of technologies and that they have a very specific use. Something that's really interesting is that the advice tech stars, 73% of them have a 12-month technology roadmap, and 58% of them have a 24-month roadmap. So what are they going to implement? What are they going to use, and why are they going to use it compared to the industry, which is around 39%? And again, advice tech stars, 33% have a dedicated technology manager. So in bigger practices, that might be one individual, but in smaller practices, it just means that there is someone in the business that is ultimately responsible for all of the technology decisions. I'm not going to go through all of these, but if you're interested in how you benchmark against either the industry or the advice tech stars, and I'd suggest that's where you want to really be aiming for based on everything we've just been through, you can download the advice tech report for free from our website, or I'm sure we can get Mark and the team to send it out afterwards, and just start to work through some of these areas about where you might be focusing your efforts over the next 12 months. Is it around the client experience? Is it around client administration? Or is it about your broader infrastructure? But well worth doing to start to really work out where you're going to get the best bang for buck. Okay, another really big change in the industry and across, I think, all industries is just client data and the capability of data. So data as an industry, we have more data than pretty much any other industry that I can think of other than maybe medicos. So through the client fact find, we get to find out their goals, their aspirations, their finances, how many children, estate planning, relatives. There's so much information that we collect, and yet historically we've not been particularly good at actually using it. However, what we're seeing now is a lot of work being done across the industry, particularly in the best practices, to start to pull all that data together so that they can start to deliver whole of wealth reporting, and we'll go through that, but also client analytics, understanding their business better. So if we look at really where the industry is heading over the next 12 to 24 months, currently advice tech stars, and we'll keep using them as sort of the best of breed, if you like, 38% of advice tech stars are already using data integration technology. But key is that a further 38% are looking to implement it in the next 12 to 24 months. So that's, give or take, 80% of the best practices in Australia are going to be using data, they're going to be integrating it, and they're going to be delivering on many of these aspects. So they're going to be pulling together whole of wealth reporting so that they can see the client's whole position, which they can then use to provide better advice or to give their clients a better experience. So pulling through bank feeds, pulling through property feeds, pulling through data from places like MyOb or Xero or mortgage origination platforms. All of this data is available and it can be integrated and it can be used to deliver better outcomes. Equally, when you're looking at client analytics, how many of you have really succinct dashboards within your business so you can see fee and revenue information at a glance? How much is a client or a family group worth to you? How much revenue or FUA do you have per age bracket of clients? Are you too heavily skewed to pre or post retirement? Are you actually building up a fantastic emerging affluent client base? So this is the sort of information that you need to have to be successful in the future. And ultimately, when it boils down to it, what this allows you to do is to then deliver proactive advice. I touched on before some of the KRIs or the KPIs or benefits of client data. And I'll use some of the things that we're doing as examples, because not surprisingly, we're pretty passionate about this and we're investing in solutions to help advisors with this. So recently we invested into a business called Xeppo. So Xeppo, at its core, around 25%, and we'll look to increase that significantly in the next year or two. At its core is a data aggregation platform. You can connect it to all of those different platforms that I just mentioned before. So it could be Xplan, Midwinter, Microsoft, Class, BGL. There's 28 plus different enterprise solution connectivities where you can pull data into your environment, and then you can start to do a whole range of really interesting things. So from a practice insights perspective, all of those analytics I touched on, you can easily get, and they're updated in real time across all providers and all platforms and all insurers. You can easily see at a licensee level, or again at an advisor level, have any of my clients died recently? Am I collecting fees for them? Am I missing FDSs? Are there any warning signs that I need to know about before it becomes a compliance issue? And all of this can be done, as I mentioned, in real time. Where it goes from there, and this is a prototype only, is all of that data, once it's in the data warehouse, can be pushed into your CRM. It could be a Xeppo CRM or an Xplan or another CRM. It could be pushed up into the Netwealth client portal or the mobile app, so that your clients can see that whole of wealth reporting, and we can start to use data analytics, machine learning, AI, etc., to mine that data to give insights back to you as a practice, but also to your clients that might generate an advice discussion. So, for example, if you're connected into Domain or one of the property aggregators, you'll be able to be notified that your client has just listed their rental property for a new renter, or that they're actually looking to sell it. Or you might see that they've sold their family home or one of their investment properties and might have money coming in, or will have money coming in, that you might want to invest or pay down some debt with. So that's a very simple example, but there are so many different use cases once you've got your data in good order. And this is not a huge project. This is not difficult to do. The tools exist. It's just about prioritizing it within your business. Okay, so data is difficult though. So, there are a lot of steps you need to do. We can make it easy. The tools are out there. But the first thing, if you're interested in this side of the business, is you need to develop a clear implementation strategy. There's no point connecting to 28 different enterprise solutions if you actually don't have a plan for what you're going to do with that data. So understand what it is you want to do, what's the outcome you're trying to achieve, then work out what the data you need to deliver on that, and then go about collecting the data and making sure that you've got the right data technology and management system to do it. Centralize it, visualize it. So having dashboards using things like Microsoft BI, incredibly powerful, where you can have different dashboards for different people in your business. You as the business owner might just want to, at a very high level, the business metrics on a daily basis. One of your administrators might actually want to see how many outstanding work items there are. But also visualizing it, understanding that people have different ways of absorbing data. I'm a very visual person. I love graphs and charts because it's really easy to see trends, I think, when it's presented in that way. Other people love digging down into it and actually seeing the rows and rows of data. So being able to see it in those different ways is really important. Then start to think about using your data for great client experiences. And naturally, if you are going down this path, and even if you're not, cyber security is critical. The crooks understand that we have a lot of data. They understand that we control a lot of money, and they're targeting us. We're hearing a huge increase in the number of firms that are being attacked or are having issues or have lost money through different means. So probably another session for another day, but make sure you're thinking about your cyber. Okay, the next one, a digital experience is more than a Zoom. We've all adopted Zoom. We've all had to adopt Zoom or Teams to basically run our businesses. But moving forward, and this is happening already, we need to understand that, particularly post-COVID, clients are communicating across a whole range of different communication channels. And you need to understand that you have to live where they want to live, not where you're forcing them to. The best way to explain what omni-channel communication is, which is a pretty fancy term that marketers use, is to use my mum as an example. So my mum, she's I think early 70s, I think that's right. She's reasonably digitally literate, but equally she rings up regularly to tell me how frustrated she is with something that she can't log into or do. But having said that, she'll often text me, She'll often send me something on Facebook Messenger, which could be an article that she saw on Facebook that she wanted to share. She could email me something. She'll call, she'll text. She might speak to the kids via FaceTime. And at some point, some of those will be completely independent conversations. Sometimes the email, the text, the Facebook might all be part of one conversation. So she's communicating across 5, 10 different channels because that's where's most convenient for her at that particular given time, or there's a particular reason she wants to use that medium, e.g. FaceTime. So when your clients are coming to you, you need to understand what's their preferred communication methods. How do you actually bring all of those different communications into a single spot so that you can deliver exceptional service back to them? Through a new live chat function that we've rolled out, there's a range of different options that you can have. So just because they've contacted us via live person doesn't mean that they want the response to be via live person. They might want you to respond via WhatsApp, Facebook, or give them a call at 7 p.m. tonight once the kids have gone to bed. So this is all happening. It's happening rapidly, and it is getting more complex. But again, you need to start thinking about it. And from a compliance perspective, how do you make sure you've got records of all of these different communications? It is getting challenging. To sort of try and understand, though, how clients are wanting to communicate moving forward post-COVID. Again, off a big bit of research that we did around the advisable Australians, so trying to understand who they were, but also what they wanted from their advice relationships. We started to dig down into moving forward, what is your preferred communication method and how do you want to interact with your advisor? Now, this is sort of over the last 6 to 12 months, as I mentioned. So overwhelmingly, and everyone on the call would agree, the initial meeting, 80% want to do face-to-face. It is really hard to do business development via a digital interface. It's hard to see visual cues, it's hard to build rapport, but we've obviously had to do that. But moving forward, when things go back to normal, face-to-face is the preferred method for all clients, 80% of clients in that initial meeting. But that's really where things start to change. If we then move to the follow-up meeting, 54% are saying, yep, face-to-face is good, but equally, the other 50% are saying, I'd also be happy with a phone call or an online meeting. When it comes to signing paperwork, SOAs, application, 45% are still using traditional sort of methods. So 43% are saying face-to-face would be good, so you can walk them through it. A couple are saying phone call, or just we'll do it via an online meeting. But equally, 45% are saying, you know what, just email it to me or post it, I'll sort it out and I'll come back to you. I don't need to interact with you necessarily. Important documents, similar, but it's starting to move more and more to email and other digital means such as client portals. Answers to queries, phone call, face-to-face, 28% are saying phone call is pretty good. 47% just saying email me. I'm busy, I've got other things to do, I'll get back to you when I need to. And so it goes on. So again, the point of this slide is that we should not take for granted that our clients want to do everything face-to-face anymore. Initial meeting, absolutely. But when you're thinking about how you start to redefine your service proposition, and that ultimately flows through into your pricing proposition as well, can you reduce your cost to serve by not necessarily spending an hour and a half with every client for every review meeting? But more importantly, are your clients actually going to be happier? So they could be very happy with a 15, 20-minute review meeting rather than coming into town, into your office, etc. Worth thinking about, but important to your clients. From our perspective, and again, this is something that came through really strongly in the advice tech research that we did this year, the next frontier is mobile. And again, I'll use our mobile side as an example because we are investing heavily into it because we really see this as the future of digital engagement for advisors. And client portals are very broad, and we'll talk about some of the different things that clients are wanting from their client portal. And that could be mobile or web. So 29% of advice tech stars are using a client portal or a mobile site with their clients today. But importantly, 62% are looking to implement in the next 24 months. So nearly 90% of the industry, or the advice tech stars, the better practices, will be offering their clients a digital interface into their advice business. Those that have already done it, 42% have said that they've seen better client engagement across their clients. And as I mentioned right back in the earlier slides, not only better client engagement, but 40% of their clients are more satisfied as a result. When we look at some of the other areas that advisors are citing big benefits, and again, these are some of the screens from our mobile site that are coming up and sort of, I guess, the future roadmap, 39% improved transparency. So clients are loving the total household balance sheet. They're able to check quickly their performance on investments, and in many cases, they're able to track their spending. On the spending side, it's less relevant is the budgeting. So they find it typically the feedback we're getting is that clients find the budgeting interesting, but it's hard to manage for the advisor. and clients typically start to lose interest after about 2 to 3 weeks. What they do want to see, however, is what the money in, money out, and where it's going. So how much am I spending on entertainment or Netflix or online shopping, etc. So just giving them a high level overview of where their money's going so that they can start to tweak and change their behaviours. 35% have cited improved collaboration. So that is the ability to sign and approve financial documents or securely stored documents via an online portal. So wills, powers of attorney, SOAs, ROAs, all those sort of important documents. 37% improved communication. So again, we're looking at this. So broadcasting updates and newsletters, but also having an online chat. So the ability to ask a quick question and get a quick response. And finally, 23% have seen an improved client education because of that access to news, insights, research, calculators, webinars, and podcasts. So there's a lot to think about. But again, I highly recommend that you start to think about what you're doing in that sort of client portal, because it becomes that digital interface with your clients, which we know is so important. I won't go through everything on this slide just in because of time, but again, really important just to highlight that it's not just the millennials that are looking for this. It's also your high net worth clients. We thought we'd show the two extremes because they're obviously a very different profile of clients. So if you run down this sheet, what you can see is the little grey box is the percentage of firms currently offering this to their clients. And then the pink dot on the right-hand side for the first one is millennials, so the hot pink, and the mauve or purple, I guess, is your high net worths. So high net worths and millennials are actually tracking in very similar percentages to what they want from their client portal. So things like access to performance on my investments, tracking of spending and budgeting, ability to sign documents online, and chat with their financial planner. So these are all serious trends that are affecting all clients. Okay, and the last one, I've got a few more minutes to go and hopefully a couple of minutes for Q&A at the end. Portfolio construction at scale with managed accounts. Now, managed accounts have been around for a little while. We launched our managed account back in 2015. We were the first of the mainstream platforms to integrate it with the broader platform offering, and we've just seen exponential growth ever since. And this has only sped up over the last 2 years as clients and advisors understood the benefits. So if we look at those that are currently using managed accounts, and this is again across the whole industry, so overall, we're seeing 57% of all practices are either currently using or intend to use managed accounts in the next 24 months. It's a staggeringly high number. Advice Tech stars, 64%. Firms with greater than 30 staff, so this is big businesses looking at how they can drive efficiency and engagement, 67%. And multidisciplinary firms, so that is that are offering accounting, wealth, debt under one roof, 60% are already using or intend to over the next 12 months. So this is now a very mainstream way of managing money on behalf of clients. Now, historically, it's always been about the back office. So how can I drive efficiency, better trading efficiency for my business? But what we're now seeing, and which is really pleasing, is that there's a lot of significant client benefits. So clients are actually saying that they've got higher levels of satisfaction, that they're more engaged. And a big part of that is because of the consistent and reliable delivery of the investment solution that they signed up to. So because of the nature of managed accounts and the disclosure and the mandate checks that go around it, clients know that what they're going to get is true to label. And clients, particularly over the course of the 2 years throughout COVID, really got to see the benefits. So what we've done in this chart, it's a little bit busy, but we've effectively mapped the transactional volumes of the managed account, which going back to March was about half the size of what it is now. So it's about $5 billion. It's now north of $10 billion. And we mapped it against the ASX 200, the All Ords, to see if volatility and market sentiment increased or decreased the amount of activity within the managed account. And it absolutely did. But the real story here is that you can see transaction volume steadily increasing throughout March. And as the ASX fell, model managers were meeting daily. They were looking at the data from overnight markets and they were making changes. So in the first month or two, nearly half of all 300 managers made significant changes to their portfolio. So to really boil that down again, as the market fell, nearly all the managers were looking at and de-risking their portfolios. They were removing risk on a daily basis as it reacted to market news. On the 19th of March, however, which is pretty much when the market bottomed out, we had our biggest trading day ever at that point. So that was really, we had 42,500 transactions processed just in the managed account on that one day, which was basically the bottom of the market. And from that point on, and most of those were buyers, on that point on, people started to benefit from opportunities. So de-risking on the way down, benefiting from opportunities on the way up, and clients made significant money as well as not losing money. Now, that could not have been done in a traditional advice framework. It is simply not possible to rebalance all of your clients and to make those sort of changes on a wholesale basis, almost on a daily basis in some cases. And so not surprisingly, off the back of that experience, we have again seen a huge uptick in the number of people inquiring about managed accounts, adopting them and using them for the first time. But it really is about that consistent and reliable advice and making sure that your clients are getting the best investment outcomes possible. So again, I somewhat apologise for the amount of information and data that I've just walked through in the last 40 minutes. There is a huge amount of additional stuff that we can talk about. If you're interested and if you believe what you've heard today, we've got lots and lots of workshops, we've got research papers, and we've got sort of demographic information on all sorts of client types. So make sure you get in touch with either me or your local BDM, and we'd be delighted to help you on your journey as you digitise the future and augment what you already do, which is a fantastic job of interacting face to face. So that's it from me. I hate that picture. But Mark or Michael, are there any questions, or do we have time for questions?
Just coming back on now, Matt. Might be a second. Here we go. Yes. Look, we have one or two questions, but time is tight.
Okay.
Matt, what we might do, I'm fortunate I know quite a few of your BDMs and they're probably some of the best in the industry. There's been that much information available in your presentation. It's overwhelming for advisors and they really need to extract some of the really important points you've raised. I'm sure your BDMs would be happy to partner with the practices. How's the best way to get in touch with the BDM from Netwealth in their state?
Yeah, so if you don't already know who your BDM is, and I hope that you do, if you jump onto our website, you can contact us directly. But also, Mark, if it's all right, we might just send around a contact list and you can share it with the team.
I'll be happy to send that out on your behalf, should it be easier for you, and send it to all our practices.
Excellent. Well, if that's it, thank you again for your concentration and attention over the last 40 minutes. I hope it's been useful, and good luck with your digital journey.
Matt, I look forward to catch up with you. It's been a great presentation. We thank our friends at Netwealth for sharing this data for us. It was great. Thank you.
Thanks a lot.
Thank you, Matt.
Okay.